Welcome back, members of the channel. I wanted to highlight 7 small cap stocks that I'm watching and I wanted to highlight and share with you on this video. We're in an expensive market that may have started to correct, and not sure if the sell-off is going to continue, but the S&P over the 5 days down 2.46, especially the last 2 trading days have been very red. That's where most of the losses come. If this sticks around for a while, this sell-off, for sure, some of the big cap stocks are going to sell off, but disproportionately, small caps will sell off even harder. It seems the market will sell off lesser known stocks much quicker and really discount them down to really low levels. With that in mind, it's not a bad idea to start watching some small caps that you like and be ready to pull the trigger when prices get really attractive. So I'm going to share 7 stock ideas. These are stocks we've covered in the past, but I just wanted to bring them back up to the surface and take a look and see if there might be a good diamond that we can grab at a really good price. First company I'll cover is Upwork. And Upwork is in the gig economy where people can go on this website and put themselves out there to do a particular task, project, provide a particular service. On the customer side, it's an employer, it's a company that doesn't want to hire somebody. Maybe they just want somebody temporary. I think it's a really good model, a little bit of the Uber-like model. And they are a small cap, $1.5 billion in market cap. And incredibly, you're paying 2 times revenue for a business that's doing close to 80% gross margins. They are not growing. That's the problem. And their stock hasn't really moved for the past year. And over the 5 year, it looks really ugly. It was a pretty hot stock, back in the COVID days. Everybody thought we were going to be in this Upwork model quite well, and it hasn't gone that well. The company hasn't grown fast enough, so it's really sold off. They announced on August 6th, if they could start growing this business, great things are going to happen to Upwork. Analysts have these guys discounted at 60%. I do as well. I valued Upwork on cash flows and earnings per share. I come up with about the same discount, so this one's discounted. So it's all about growth, revenue growth. The gross margins look good on Upwork. The balance sheet looks great. They have a lot more cash than they do debt. So we just need the revenue to grow. So I'll be looking at their earnings on Wednesday and seeing if they in fact are beginning to grow their business. Oscar Health is the second company that I wanted to highlight, and the whole healthcare space, the health insurance payer space, has just gotten depleted for the last couple of months. This one was not spared, although year to date, this one's still up just a tiny bit. Over the 1 year, it's down 23%. This is a $3.45 billion market cap company, and this is typical. The revenue is much higher than their market cap, and the PE for the current year is 29.4. They're expecting to lose some money next year because there was changes to the reimbursement rates for particular programs that the government funds with the big bill. And that's going to affect a lot of people, and it's going to affect Oscar Health. Analysts think it's a sell. Boy, they really ran away from this stock quickly. I'm not quite a seller. I'm actually a buyer because this growth rate looks really good. And this company could really start putting on a pretty large revenue run rate. And they drive cash flow. And that's what I'm looking for. If they continue to drive this cash flow, even if it was half of this cash flow, this is a highly discounted stock. And it's going to take a while in healthcare for it to turn around and for things to not be as negative. But when it does, I think Oscar is going to be a big, big winner. And I think Oscar shareholders are going to be big, big winners as well. The next stock that I'm going to cover is eToro. And this is a newer stock. It's interesting because it's very much like Robinhood or Interactive Brokers. Both of those stocks have done really, really well. EToro operates out of Israel and they service a good part of Europe. That's where most of the revenues come from. And stocks are doing really well in Europe. Stocks are doing well globally. The market cap of eToro is 4.86, really low market cap compared to Robinhood, Interactive Brokers, Charles Schwab, and others. Revenues 12.89 billion. Overall, the PE ratio is really low, and analysts think it's a buy and it's discounted. I agree, it's highly discounted. The company is a newly listed stock, and it has really expanded revenues quite fast. It was less than $1 billion in 2021. Now they're close to 13 billion. So that's really, really good growth. If they can keep growing like that, there's just no way around it. They're going to be more valuable. They also drive free cash flow. What's interesting is this stock over the 5 days sold off about 10%. Year to date, it's up 11%. So it's not quite, been a popular stock for investors just yet. But with a small cap like this, if if they get enough investment, this stock could really go up. Finnvolution is the next small cap that I'm watching, and this is a $2.08 billion market cap company. Revenue is 1.85 billion, so really close to their market cap. This is a consumer finance company in China, and China continues to have a bigger middle class. People are buying bigger products, and I think consumer finance is becoming a bigger market. These guys have a really low PE. Just their fundamentals look really strong, high gross margins. They're not growing really fast, but their margins are really high. Analysts have them discounted at 40%, strong buy. I too think it's a buy, and it's actually discounted more than 40%. The company has had a pretty strong pullback recently, but it's still up 47% over the 1 year. And year to date, it's still up 21%, and it's had this strong pullback. So I'm an investor in Finnvolution and watching to see when it's going to start to move up, and then I'm going to buy more shares. So this is another one of those small caps that I have on my watch list. AMR is the next small cap, and this is a $1.5 billion market cap company. Revenues are 2.63 billion, higher than market cap. This is a miner of the coal that goes into steel production, and the PE this year is 56, but next year it's going to drop to 16. It's a buy with a discount of 23%. I think it's discounted even higher than that. It had a really nice rally going from 109 way up to $141 per share in the last 30 days, but it's giving up a lot of those gains. It's only up 2% in the last month. This stock has been sold off big time over the 1 year. And my reason for being interested in AMR is I think with these tariffs and the intent for the president to have more domestic production in the US, it makes it, I think, more viable for an American coal miner to be producing coal that goes into the steel production um, supply chain for companies that are going to be producing steel. So that was the big story as to why I was interested in AMR. I continue to be interested. And I think if I could see this stock begin to rally again, I'd probably add a few shares. Most definitely, it's a small cap that I am watching. XP is a financial services company operating out of Brazil, providing brokerage services as well as other services to folks down in Brazil. And this stock is up 38% year to date, but it's had this pullback that has really brought down the stock price. Now, this one here we found on a live stream and it looked really good. $8.67 billion market cap, revenues 2.89. So paying about 3 times sales. P ratio looks really reasonable at 10.8. It is in Brazil, so I'd probably have a higher discount rate, so I want a greater return. Strong buy with a discount of 45%. My discount's higher than that. When we look at their overall growth rate, they're growing about 10% per year, 9.27 in the most recent year. And their free cash flow is very high, and their operating margins are high, profit margins are high. So those are the really attractive metrics for the company. Overall, is one of the stocks I'm watching. I'm waiting for it to begin to rise again. There's a lot of stocks in these sell-offs, and we are in a big sell-off. If we're in this sell-off for a couple months, I think all the stocks I'm covering are going to be priced even more attractively as we near the end of this sell-off. So that's the list of small cap stocks I have on my watch list. Again, the investor that is prepared during these sell-offs will make money over the long haul. And watching these stocks, analyzing them, keeping up with them is the opportunity for investors to grab these stocks at really good prices. I've done this over and over again, waiting for companies that I want to own, waiting for a good sell-off, picking up stocks at the right time, then watching those stocks flourish and return a great, great rate of return to me. So I hope you found the video interesting. Thanks so much for your support and good luck with your investments.